Hello and welcome back. In this video, I'm going to talk to you about India's biggest banking fraud. This is India's biggest banking fraud. 17 banks have been cheated. Let's explore. So the company which has committed India's biggest banking fraud is DHFL, Diwan Housing Finance Limited. Before I tell you about the case, how DHFL committed this fraud, let's just understand the context of this case. So just a few days back, the CBI has booked the Wadhwan brothers, okay, and they are the brothers, they are the people who are running DHFL, and they have been booked for an alleged bank fraud of rupees 34,615 crores. It's a humongous amount, and given this amount, it is being called as India's biggest banking fraud. So following a registration of a case on June 20, 50 officials from CBI did a search operation on 12 premises in Mumbai that belonged to DHFL. This complaint was done by Union Bank of India. So the 17 banks that had led to DHFL, this consortium of 17 banks was led by Union Bank of India. And the consortium of banks gave a loan of rupees 42,817 crore between 2010 and 2018 to DHFL. Okay, so the timing of disbursement of loan was 2010 to 2018 to DHFL, and the consortium of bank was led by Union Bank of India. Okay, I'll tell you why Union Bank of India did file this FIR with the CBI in a very short while. Right now, just to give you context, right now the Wadhwan brothers are already in judicial custody, but this is in relation to another fraud case that is going on against them. This is the new one. This new case, this case right now that you're talking about is very recent. It has just been alleged. FIR has been filed and CBI is taking action. But the Wadhwan brothers are already in judicial custody because of a previous fraud case. Now comes an important question. So what is the acquisition? So the acquisition is that DHFL took loans of rupees 42,817 crores from a consortium of 17 banks led by the Union Bank of India. Okay. But what DHFL did was they took these loans and they carried out fraudulent activities. They gave out loans to their own entities. They gave out loans to companies and entities owned by themselves without proper due diligence, without obtaining securities, and they also falsified book accounts. Let me just explain to you in very simple words what is the case all about. So you see, what does DHFL do? Let's first understand this. DHFL stands for Diwan Housing Finance Limited. So basically it's a housing finance company. It is a housing finance company. Okay, so basically it gives out loans or it gives finances to people for buying houses. Okay, they give out loans to people for buying houses. Okay, for buying houses. That's what DHFL does. How do they do it? So basically they are giving out loans and they charge an interest. Okay, for example, when they give out loans, they are charging, for example, 14% interest, and they are giving to their customers. But the question is, where does DHFL bring this money from? What DHFL does is that they take loans from banks or from other lenders at a cheaper interest rate. For example, from banks they are taking, for example, at say 6%. Just give me an example. From banks they have taken a loan of 6%, and this loan they disburse to their customers at a higher interest rate. This differential in the interest rate is what DHFL earns. Clear? This is what DHFL does. Now the allegation is that DHFL took the loans, that's fine, but they gave these loans to their own entities. Okay, they gave these loans to their own entities. Now giving loans to your own entities is not a crime, it's absolutely okay. But the problem is when DHFL started defaulting on the loans, on the repayment to the banks. What DHFL said is that, see, we have given loans to these entities, these companies, but they are unable to pay us back, so we cannot repay your loans. We cannot repay the loans that you have taken from you, that is from the 17 banks. Okay, and that's where the problem is. They went for willful defaulting. Now you see, NPS, or in other case, these are also called NPS. Now, NPS can happen if it's a genuine reason, it's absolutely okay. But in case of DHFL, it was found that they were willfully defaulting, and I'll tell you more about this in a very short while. But the bottom line is, DHFL gave loans to their own entities and they willfully defaulted on the loans that they took from the 17 consortium of banks. Okay, that is the case. Now, one more added allegation is that DHFL disbursed an amount of rupees 14,000 crore as project finance, but instead showed that as retail loans. So what they did was they showed that we have disbursed 14,000 crores to retail customers, okay, to individuals, families, retail customers. But in reality, they did project finance, right? They gave to their own entities, right? Other companies, okay. But in their books, they showed it as retail loans, and as a result, the retail loan portfolio was very inflated, okay, and over 1.8 lakh false and non-existing loans were created. They showed that we had 1.8 lakh retail loans, but this was all false. They gave this amount to their own entities, okay, and in their books they put it under the Bandra books. The records were kept under Bandra books. That's what they named in their database. But later on, in order not to get caught, they merged this with OLPL loan, that is other large project loans. You see, DHFL said that we gave to retail customers, over 1.8 lakh retail customers, but in reality they did not give to retail customers, right? They gave to other companies. So what they did was, later on they merged this entire loan amount with their other big project loans, okay, in order not to get caught. This is the accusation against DHFL. Now the question is, how did this allegation or this fraud came into the limelight? As I already told you, the FIR was filed by Union Bank of India. Now what happened was, the loans were given from 2010 to 2018, right? But DHFL, they started defaulting on their loan from May 2019. May 2019, that's when the default started. Okay? That's when the banks rose. That's when the bank said, what is happening? Why is DHFL defaulting on the payment? Okay, to understand this, to investigate this, DHFL approached KPMG. Okay, DHFL approached KPMG. Okay, what is KPMG? KPMG is a world-renowned audit firm. KPMG did a thorough investigation and KPMG submitted its report to the banks on November 2019. And what KPMG found was gross financial irregularities, funds were diverted, books were fabricated, assets were created in the name of the Wadhwan brothers by using public money, right? So basically, gross misappropriation and irregularities were found by KPMG. And based on this report, the banks led by Union Bank of India went to the CBI and they filed a case. Okay, so that is how this case came into the limelight, based on the report of KPMG when DHFL started defaulting on its payment from May 2019. Okay, so I hope you understood why this is the biggest banking fraud of India. We are talking of an amount of over rupees 34,000 crore. This case is an ongoing one. The CBI is investigating the case. There are more new information that are to be that has to come in the limelight. Okay, but for now, this, if the allegations are proven to be true, this easily will be the biggest banking fraud in the history of Indian banking. Thank you so much for watching. I'll see you again. Bye bye. Take care.